In this video, we will show you a remarkable 1 to 7 winning trade profit using smart money concepts and volume profile and order flow analysis using footprint charts. We will also show you the full trade setup breakdown showing exactly where to place the trade and take profits. Click the market profile tool from here and draw it from this swing point to this swing point down. At the volume point of control, not the regular candlestick chart. This is what you call as a footprint chart. Aggressive buyers has been trying to push the price up. The passive sellers have absorbed the aggressive buyers, and that is why the price has made a wick and sharply pushed down. So what you saw was the order flow analysis using the footprint charts. Place our stop loss just above this high volume cluster, bearish fair value gap from here to here. High volume cluster. Move your trailing stop loss into this area above this high volume cluster. We exit our full trade for a remarkable 1 to 7 risk to reward. So we are in the micro euro forex futures 30 minutes chart. If you look at the most recent price action, you can see the price has been pushing up. However, if you look at this area, you can see the price tried to push up after this swing leg push up, but you can see it's unable to push up and it's showing a slight momentum downwards. And if you look this area, you can see there's a slight market structure shift down, and this is the micro GBP forex futures chart, and you can see in this chart it's showing weakness. If I again go back to the euro forex futures chart, compared to the GBP forex futures chart, the euro forex futures chart is not showing that weakness. However, fundamentals and market sentiment suggests at this moment currently a potential short-term euro weakness. Also, you can see in this area the price has made a gap up and now the price is ranging over here. So there's a possibility where the price could come down and close this gap. So what all that suggests us is a potential euro weakness. So what we are looking is to see if there's any possibility of taking a short entry at this moment. So now when this market structure shift down happens and in this slight momentum down period, you can see it's making a smaller downtrend in this price area. And then you can see it is kind of in a retracement. And since the overall sentiment is bearish, what we are trying to see is if we could take a potential bearish entry, sell entry over here. So for us to check that and to use volume profile tools, we will now draw the fixed range volume profile from this point to this point down over here into this smaller downtrend area. So you could draw the market profile, you could click the market profile tool from here and draw it from this swing point to this swing point down. So now you can see in this downtrend area, there are some high volume clusters seen over here. And you can see for this area, the volume point of control is over here. And now you can see the price is in a range just in that area. So which supports our idea of a bearish entry. And also you can see the price is making wicks over here, which means the price is not able to go higher and price is pushing down. So now what we will do is to get more insights of what's happening here, let's do an order flow analysis into this area. So for that, what I will do is I will keep zooming the chart over here. So when I zoom the chart over here, now what I see is not the regular candlestick chart. So this is what you call as a cluster chart or a footprint chart. So this is a fundamental tool used in order flow analysis. So in this footprint chart, in this area where the price made a wick and here the price made a wick, we can see aggressive buyers has been trying to push the price up. However, they have failed to do so, and we can see the passive sellers have absorbed the aggressive buyers, and that is why the price has made a wick and sharply pushed down, and you can see more aggressive sellers. So this gives us an idea where the price is potentially pushing down. Also in the volume footprint of this candle, you can see aggressive buyers has been trying to push the price up. However, they have failed to do so, and we can see the price has come down and made a wick in this area, which means the passive sellers have absorbed these aggressive buyers. So what you saw was the order flow analysis using the footprint charts, which gives us some extra insights and confluences for a potential bearish short entry. So now we'll zoom down again. So when you zoom down again, you will see the regular candlestick chart you were seeing earlier. If you would like to learn the trading strategies we use, click the link given in the description below to access the full free course and use that knowledge to get funded and start trading like a professional. Also, at this moment when we had a look at the smart DOM, which is seen over here, we noticed the same absorption happening, and the smart DOM as well showed the prices potentially pushing down in this range build-up area. So the order flow analysis and the volume profile analysis gave us some extra confluences for this trade to be a potential winning trade. So what we will be doing now is we will place a sell stop order below this range build up. So if price breaks below this range, we will be entering into a sell entry. So we will place a short entry, short position below this range build up over here. So we will place our stop loss just above this high volume cluster, and we will place our first take profit to be a 1-to-1 risk to reward, where we will take our first partial profits, and if the trade moves further down, we will keep some part of the trade running down. So now let's see what the price is doing. You can see the price is pushing down, and now you can see the price tagged our short entry, and now we are in a sell entry. Let's see what the price is doing now. Also in the process you can see the price made a bearish fair value gap as well, which is also extra confluence for a short entry for a potential sell off down. You can see the price tapped that bearish fair value gap and price started sharply pushing down. Now you can see the price is pushing sharply down, and this is in line of the GBP Forex futures, which is already bearish, and the suggested bearish market sentiment and fundamentals. Let's see what the price is doing now. And you can see with the sharp red candle, the price immediately hit our first take profit. So what we do is we take our first take profit over here, and then we will keep some part of the trade to further run down. So now let's look into trade management and managing this trade with incremental partial take profits and trailing the stop loss down to secure the profits already gained. So for that, what we do is we will draw the fixed range volume profile from into this swing leg down, where we could see the price is strongly pushing down. So let's use this market profile tool and draw it now from here to here, and let's see what the price is doing now. So now you can see in this area the price has started to build a range. So what we do is we expand this volume profile tool to cover that area. So where we can see a high volume cluster over here, and because there's a range build up over here, what we do is we will take our second partial take profit in this area, and then we will move our stop loss just to be above this high volume profile. So if the price comes all the way back, we are not taking the full stop loss, and we will secure the profits we have already gained. So now let's see what the price is doing. You can see the price is sharply pushing further down, and also the price has started to build another range in this area. So what we do in active trade management is, after seeing this range build up, we will take our next partial take profits over here for a 1 to 3, and then we will move the fixed range profile up to this area to see where the next heavy volume nodes are, and you can see a heavy volume node build up over here. So what you do is you will move your stop loss above this heavy volume node up to over here. So if the price comes all the way back, we are not taking the full stop loss. At the moment we are in a 1 to 3 ongoing running profit. Let's see what the price is doing next. You can see price is further continuing to push down, and price is further going down, and now the price has again started to build up a range, but it quickly broke down, and you can see it's continuously pushing down with a bearish momentum. And you can see again the price started to build up a range here. So what we do next is we will take our next partial profits in this area for a 1 to 4 risk to reward, and then we will move the volume profile tool to cover this area to see where the next high volume nodes are. So you can see in this range build up in this area there's high volume cluster, so you will move your trailing stop loss into this area above this high volume cluster, and we will let the trade to play further. You can see the price is in a range in this area, and the price broke that range as well, and price is further pushing down because the market sentiments suggested a potential weak euro. So you can see the price is again building up a range in this area. So what you do in active trade management is you will take next partial profits at this level at 1 to 5, and then you will move the volume profile tool and you will figure out where the next high volume node is. So you can see there's a high volume node over here. So you move your trailing stop loss above this high volume node. So if the price reverses back, you secure more profits. Let's see what the price is doing next. You can see the price is sharply pushing further down because of potential weak euro and short-term high bearish momentum for the euro. You can see the price is further pushing down, and you can see the price is pushing down, but it's weakening the down momentum in this area, meaning the red candles are getting smaller and smaller. So when we see the red candles are getting smaller and smaller, when you do active trade management, what you do is you will take your next partial profits over here. So we will take our next partial profits for closer to 1 to 7 in this area. And you can see in this range build up, there's a high volume cluster. So we will move the trailing stop loss into this area over here. Let's see what the price is doing next. So when we see the candles are getting shorter and shorter and range build up, this is where we exit our full trade for a remarkable 1 to 7 risk to reward ratio. So what you saw was a remarkable 1 to 7 risk to reward trade profit with volume profile and order flow analysis using footprint charts, with smart DOM, and with active trade and risk management. If you would like to learn the trading strategies we use, click the link given in the description below to access the full free course and use that knowledge to get funded and start trading like a professional. Okay, so it's end of the video and we will see you in another video.